there's definitely not a one size fits all. I think it just kind of depends on the company's goals and expectations. I think it's important to understand what is the goal of the client at the end of the day, right?
Welcome to Higher Law, a cannabis podcast from the Dykema law firm. I'm your host, John Frazier, senior attorney and Michigan team lead of the firm's cannabis practice. On the docket today, we're joined by Andrew Dakki and Matt Abbo, founders and CPAs of DA Advisory Group, a CPA and advisory firm that focuses heavily in the areas of cannabis law. Thanks, Matt and Andrew, for joining us here today. Really glad to have you on today's episode. Yeah, great. Pleasure to have you guys. So I'd like to start off just with a really simple question is, what does a cannabis accounting firm do? What's special and unique to handling accounting and tax work for cannabis businesses in general?
Obviously we're a traditional CPA firm. I would say it's very similar to any other CPA firm. We're running tax, account advisory, ad test services. The only difference is kind of understanding about these nuances of cannabis. So the different laws, different tax regulations that obviously, the space has quite a different group of people that come from a lot of different backgrounds. So it's the first time, you're in a room with a company that has somebody that was like a grower for 10 years and also like a Harvard MBA. So it's like they're on the same team, and it's just something to add to that. Yeah, no, that's good. And I'd like to say that I think that cannabis requires accountants and I'm sure attorneys to get creative, especially because of it being federally illegal and because of 280E. I think there's just a lot of planning that's involved, a lot of consulting, probably more than a traditional CPA firm would do. And again, like I said, you have to get that creative mind as far as, how can you best benefit your client with following within the lines of the IRS code. And I think that's probably been the most challenging, but also the most rewarding. Like kind of Andrew alluded to, I feel like in our time spent in the cannabis space, I've probably learned more about accounting principles and planning than I have in my prior positions at Ernst & Young and Noble Rad.
Yeah, you're certainly right. Not only is it an eclectic group, for lack of a better word, of folks working in this space, but there's always a lot of education, it seems like, for a lot of these operators and investors and entrepreneurs. So couldn't agree with you more, and 100% agree that working in this space really requires you to be creative and innovative, because you do have that, that the federal illegality situation is always just kind of lurking there in the background and makes you think outside of the box. So instead of having, we've done this 1,000 times for this type of business, we know exactly what it is. We don't really have a data set here. So, we just kind of have to try to do what's best, make sure we're taking good, sound approaches and also furthering the client's objectives. So I think that's, I can say confidently it's very much the same in the legal space as well. I was wondering if you all could give, I know, Matt, you raised it just a moment ago. Can you talk about what Section 280E of the Internal Revenue Code actually does in practice, and what you advise clients to do to help kind of navigate that kind of big landmine that's just right square in the face of operators?
Sure. Yeah. So Section 280E is really a very short code section, and in summary, it essentially is the disallowance of deductions for any ordinary or necessary business expenses, except for cost of goods sold. And a lot of people, I think, have a hard time understanding it or accepting it, just because it really does have a huge impact on their tax return and other tax liabilities. And so cannabis is considered a Schedule I drug, and Section 280 is basically anything that's Schedule I, 2 drug, it applies to that tax code. So eventually, if it becomes federally illegal, then that code section would not apply to the cannabis space. But as of today, that is in effect. And so a lot of operators have to take that into consideration when they're considering the projections, raising capital and, thinking about preparing their tax returns. I actually recently did a tax return for a client. They decided to file on their own through H&R Block their 2021 cannabis tax return. They had about, I think, 90 investors, and they took all the deductions. So there's about like $3 million of losses that they had taken. And all of these partners took this benefit on their K1. It was a partnership return. And in 2021, when they engaged me, I told them, guys, this is absolutely incorrect. If you get audited, all these losses that you took, you're going to get added back, and you're going to potentially pay penalties and interest if you add that back and have a tax liability. So, these are a lot of things that I think people are just not aware of, and it's very crucial to be planning and understanding, what do we really mean to what you are and are not allowed to do. I think that people, they just take the initiative without understanding. And I can't tell you how many countless times until some operator was licensed and it came time for tax year, they said, oh, wait, I can't deduct these expenses. And it's like, yeah, man, you can't, these are things that are just disallowed due to 280E. And, just to touch a little bit more on, what is a deductible cost or what is not. So anything that's a general selling or administrative cost, like legal fees or accounting fees, advertising fees, those are the type of fees that the IRS disallows as a deduction. So what is eligible for deductions are anything related to cost of goods sold. Now, for the example of a dispensary, it's very cut and dry. I bought a card for, cost me $2 and I sold it for $4. My gross profit is $2, right? My cost of goods sold is the $2 that I bought it for. So that $2 is what essentially you're going to get taxed on. And I think a lot of people just don't understand that. But in manufacturing, whether it's a processing license or a cultivation license, you have a little bit more opportunity there because you are putting a lot more cost into creating that unit or manufacturing that unit, right? So in cultivation, right, you have the soil, you have the labor of the people that are actually touching the flower and the plants. So all of those costs can effectively be considered part of manufacturing it and therefore being a cost of goods sold. And so I think it's very important for people to understand the difference between what can and cannot be deducted. Well, anything to that? No, that was a good kind of coverage of 280 and things to consider and talking to a CPA about what is deductible, what is not deductible. I mean, the whole thing about this whole industry is there's a lot unknown. Like you were saying, like there is no playbook. When you get into it, when we file our first tax return, or we were doing the accounting for our first few clients, we're like, hey, is this right? It's just about being as aware of the tax code as possible. But for all of the owners and operators, I think the biggest key is making sure to have those conversations with your CPA and be in constant communication with them. Because there's a lot of times where people will, try to run things on their own and not have their CPAs or their attorneys on a loop. And, come, let's say 6 months later, they've been doing something a certain way and we come in and we have to go back and fix it. There's a lot of times where, I'll give a small example, like transportation costs, right? For a grower, this is usually a non-deductible expense because this is a selling cost. You're getting it from you to your customer. But for a retailer or dispensary, this is a inbounding cost, and that's part of your cost of goods sold under the tax code. So being, we've had some clients where it's, they're just doing all the expenses, tracking everything themselves, and they have this line for transportation that's a non-deductible, but like, hey, which part of this is related to your dispensary? Because that's actually deductible. So the point is just being in constant communication and from the beginning, like having a good contact as a CPA and having a good contact as an attorney, and just all the different service providers that come into this industry that might have some experience with cannabis. These are important.
No doubt. And Matt, your H&R Block story terrified me. I can't believe H&R Block was good with filing that return. But Matt, your point is Andrew, your point's exceptionally well made there. And I know you've heard it from our clients that work with you all, and I know that's a constant theme. If any of my clients were to be polled, they'd say half the time I'm referring them to go talk with their CPA on pretty much any type of financial or business decision, because we want to keep as much money in their pockets, in the business's pockets as possible. And having those tax planning considerations is just absolutely critical, especially in this market where margins are razor thin. We've got price compression. It's just critical that you're doing everything that you can on a planning perspective on the front end. I had a client a week and a half or two ago touch base with me about preparing a real estate lease, right? And the client was an attorney and has done a lot of real estate deals for a very long time. Yeah, they own the property, so they're leasing it to themselves. And so he was, taken aback when I said, well, you should talk to your CPA, as you're looking at what the appropriate lease rate ought to be. At first he was like, why would I do that? We own the property. We're leasing it to ourselves. I've done this, 100 times for, 100 clients over 20 years of practice. And so when I started walking him through 280E, he was like, okay, yep, I've got to, that's my next call at this point. So, great advice, absolutely great advice. When y'all are working with clients on tax planning, does your advice change? I think you touched on it a little bit, but does your advice change on a tax planning perspective based on what line of business or license the operator has, whether it's a cultivation facility, a dispensary, a processor, or do you have a one size fits all approach?
Yeah, so I would say there's definitely not a one size fits all. I think it just kind of depends on the company's goals and expectations. I guess how many people are typically involved in the deal. That being said, I do think you see a common theme of structuring that a lot of people are mimicking, just because it does make the most sense whenever we kind of go through all the scenarios. I think it's important to understand what is the goal of the client at the end of the day, right? Is it for, generational wealth they want to pass out to their children? Is it for a big sellout, which typically could do that situation, and what's the size? Do they have, hundreds of investors, or is it just 3 people that, have deep pockets and they're getting into this new business venture? So I think that all these things need to be taken into consideration when structuring. And of course, 280E is also a big part of that, where usually, just speaking on small businesses, typically the most common entity form is an S corp, like, our CPA firm is an S corp. But you typically aren't seeing that much now with these smaller mom and pop cannabis, either dispensaries or the processors. And I think across the board, I don't think there's any really difference if someone is a retail versus a grower or processor. I still think they still implement the same tax strategy, and we still consult the same, because the main consulting that we do from tax planning is to not to avoid 280, but to soften the blow. Because, you have a C corp, which the entity itself is responsible for any type of tax liability, and then any dividends is going to be pushed on to the investors. But with a flow-through entity like an S corp or a partnership, the partners will be getting a K1 that's going to be reported directly on their personal return. So when we go back to talking about 280E, I'll use another example. Let's say you have $1 million of sales, and then you have, let's say, $500,000 of cost of goods sold. So your gross profit is $500,000. That is going to tax you on $500,000, even though, let's say, you had other costs of call it another $200,000, right? So you really took home $300,000, but that is going to tax you on $500,000. So me and Andrew are partners. We're each going to get a K1 for $250,000 if we're an S corp or a partnership, right? So I'm liable for that whole amount, even though I probably didn't see a penny of that, or maybe a small portion, right? So I think that's a big risk for investors, is being responsible for that tax liability person. Now, that's the biggest concern that I see in the cannabis space. And so it kind of makes the C corp position a little bit more sexy, if you will, just because the tax liability is going to be captured within the entity itself. And the only time that an individual or shareholder would pay tax is on money that they received via dividend. And, so those are that's just one thing to think of, but the many considerations of, what people are thinking through, right? Because then, and maybe we'll touch on it later, but then, as far as like a merger or acquisition, right? Someone wants to sell, it's like, okay, well, how are we going to structure the deal? I think most commonly people love asset sales, right? But if I'm a C corp and I want to do a stock sale, and I want to do an asset sale, there's going to be a double taxation when I make that sale, right? The entities need to pay tax on the sale, and then whenever I distribute those proceeds to myself, I would pay a second level of tax, right? So then that causes another issue. And it comes to an interesting thing. I think at least in the Michigan market, we see a lot of big players that are acquiring smaller companies, and I think Andrew and I have kind of been doing some of the due diligence that maybe some of our clients that have been acquired. And we kind of see a similar thing where a large company is doing a stock sale, which is good for its seller, and then they're doing the stock sale so they can quickly acquire the license rather than transfer it. So they'll acquire the stock, good for the seller, and then they'll end up pulling out that license after acquired and then put it whatever entity within their own, or maybe making a new entity to kind of just strip it out, and they kind of leave that entity alone. So there's a lot of considerations there. And John, I don't know if you've been seeing this or being involved in it, but I do see a lot of instead of that kind of model, I've been seeing management agreements getting into place. So it's like, all right, I want to buy let's put this management agreement in place that the CRA is implementing, or I guess is approving, and then until that kind of bridges the gap until they actually transfer the license.
Yeah, there's all sorts of creative ways. The management agreement, we've seen some of that, and then obviously we see a healthy mix of asset purchase agreements versus stock or equity purchase agreements. So it's always fascinating, and I feel like almost all of the time the legal considerations become secondary to the accounting and tax considerations, which is probably appropriate given the nature of this business. So super fascinating to hear. I'm curious, if you all have any thoughts. I know I have thoughts on. We keep hearing I feel like it's every December, as Congress starts winding down, we always hear that there's new life being breathed into the Safe Banking Act. I'm sure you all would love that for your clients, for yourselves. What are your thoughts on any other changes? I think we'd all agree safe banking would be great, but what other changes do you think would be necessary from your perspective to really help these businesses move forward, whether it's at the federal or state level from an accounting and tax perspective?
Yeah, I mean, I think safe banking is huge, just because of the fact that, and we're limited as so many banks, credit unions and state charter banks. I think a lot of licensees, owner operators, they get into this business, and there's a lot of obviously barriers to entry. Something as simple as owner go open up a bank account, it just slows them down, stops them from moving forward. I've had so many people calling saying, hey, as if it's like, going to ruin their entire business. Kind of seems like, all right, it's not a big deal. Let's take a step back. Let's, see what our options are. But just, it would minimize the amount of, those conversations that would have to happen. So not only just opening up a bank, account, but also actual selling. So the actual dispensaries, opening up options to using credit cards, using actually debit cards rather than these cashless ATMs. I think that will be good, not just for the business owners, but the industry in general. Having people be able to purchase things without also slowing it down, slowing down the process. But yeah, I think that one will change a lot of things. And then aside from the owner operators, the others, as soon as that goes into effect, obviously there'd be a lot more opportunities for lending. So that's another big, huge issues in this industry. Is there are a lot of cash flow issues, like Matt was kind of talking about, C Corp versus an S Corp. A lot of the conversations that we have with people revolve around cash flow management and, which is the best way to go. And, a lot of these businesses, especially now in the market how it is, are having cash flow issues, and are looking for options for lending. And that's another one that's just really tough, is because even if you find a bank or some kind of a financial institution that's open to lending to this industry, there are so many, hoops they have to, jump through, and it's just it's a challenge for sure. Yeah.
Nope. No doubt.
I just wanted to piggyback off Andrew, and I mean, I think we can all agree that I think safe banking is huge. It would really be a benefit to the space, and I think those are the huge points raised. Cash flow, I think, is an issue, and being able to have access to that type of financing and being able to bank is crucial. But then you ask, what are some things that we would like to maybe propose or include in it? I think something that should be included in it is just also having access to capital markets, right? So always go on the exchange and then be able to actually raise equity, right? Because it's so much debt is being raised, but also having another avenue of fundraising, right? And so I think that also would really benefit the market as well.
No doubt. You all skipped the obvious one of, yeah, let's get rid of 280E for state legal cannabis businesses too. I imagine that was so high up on the wish list that it fell off the top of the printer page.
Yeah. No, that definitely went away. Of course, that'd make all our lives easier. And but the thing is I think once it does become federally legal, there's gonna be a whole nother set of rules to follow, right? There's going to be so much compliance that seems to go with it. The federal government is going to start imposing excise taxes. What bills will be, I've heard of a few, suggestions, but you really don't know, right? And then there's all these other agencies that probably will start to get involved. And it's like, is that going to make it more difficult for us, or is it going to make it easier? I guess we really don't know.
Yeah, that part, the federal legalization part, scares me. In a lot of ways, especially for our clients, in Michigan and in other states that have built up these, kind of smaller niche markets. They've poured a ton of capital into these businesses. And if you just completely open up the floodgates, I think we all know Philip Morris and some of these other really super huge players are ready to pivot to cannabis the instant that they can. And, does that pivot make it possible for these kind of smaller, medium-sized, or even some of these multi-state operators to survive in light of that type of a Goliath entering the market space? So I have very conflicted, mixed feelings. I certainly don't want to see anybody go to federal jail or prison for marijuana crimes anymore. But at the same time, I'm a little bit concerned about, let's just go from completely illegal to we'll just open it right up federally without kind of some sort of an intermediate step. Gives me a little bit of heartburn. Maybe I'm the only one there, but I'm curious what you all think.
Yeah, no, I think we do think about it a lot and say, hey, what's going to change with it does over legal? And kind of back to what you're saying about, we didn't mention anything about 280. I mean, I think all these things are going to be stepping stones to that, right? This whole industry is just about how people getting more and more comfortable. When we got into it, we were very uncomfortable. We're reading all the tax code and all this stuff, saying like, hey, what should we be doing? And as we attend more CPEs, like we've attended a few for the AICPA and then also MICPA. Matt and I both sat on the cannabis expert panel for the MICPA, and the kind of group collaboration on what directions people are taking had made us more comfortable, and finally tax returns, taking certain stances. And I think the same thing goes with laws and regulations. Safe banking goes into place, and you get somebody like, I don't know if JP Morgan or Bank of America or somebody to be the first in line to get into this, but these other lower tier banks, like, you say, hey, yeah, this is fine to get into it. People start to just get more and more comfortable. There's less of a stigma around cannabis, and like I said, I think it's just a stepping stone towards getting there.
No doubt. Any tips that you would give to new cannabis businesses or investors looking to enter into this space? Without, I don't want you to give away your full secret sauce, but what's one or two pieces of advice you'd give to somebody who's interested in starting a cannabis business, or just good solid advice that you'd give to any current or new operator?
Don't do it, man. No, but in all seriousness, it is a risky business for sure. And Andrew and I firsthand, we've seen people be successful and we've seen people struggle. And I've started to kind of get like a rhythm of why some people are successful versus why people are not successful. And I do think an important part of it is being able to network. They just have relationships with people that are already in the space, because I think it's at least in the state of Michigan, it's a very close-knit community. A lot of people know each other, and the ones that I see that are having relationships pre-license, those are the ones that I see are, closing deals and making things, becoming successful. And in addition to that, something that I would say is that, when people come into this space, they're always like, oh, how can I be 280? How can I just save as much on taxes as I can possibly? Well, I don't think that should be the mindset. I think the mindset should be, how can I build a brand, and how can I open up as many locations as possible, and what is the right structure for me to be able to do that in the most cash flow positive way and pay the most and the least amount of taxes. I think that's the mindset that should be in an individual whenever they're getting into this space, right? Because you see so many times that people, they just have the wrong mindset, right? They just they're not making the right decisions, and it clearly shows in their business and in their operations. So I think that is definitely I guess, tidbit that I would give to someone that want to answers in space. And then also to do your homework, right? Making sure you're reading, what does 280E mean, and really how difficult it is to run a cannabis business, because it really is difficult.
You're 100% right, and that's an education perspective. I know, yeah, I do all the time with clients as a lawyer, trying to help correct the narrative that's out there that, oh, if I get a cannabis license, I'm a millionaire overnight. The thing runs itself. It just prints money for me, and I go out and I buy a big boat, and it's smoke a joint, as I sail off into the sunset. That's not real life. It's like any business. You've got to spend the time, do the work to run and build, the business. And if the business isn't, set up on a good, solid foundation and is, regularly given what it needs to continue to grow and thrive, it's just not going to be a success, no matter how much you want it to, or the fact that you're a marijuana business.
Yeah. Yeah, no, I definitely agree with that. But that being said, a lot of these guys are not doing well. Somehow, some way, they're staying alive, man. These guys they won't give up the money, which I absolutely respect, and like you said, it's a lot of hard work and a lot of people they're putting their livelihood into these businesses. And, we always want to, make them successful and suggest anything from like a marketing standpoint or just from a sales standpoint to help these individuals, because it is a tough business that, and, as you kind of mentioned, right? It's like, I don't know what it was, a year, 2 years ago, a pound was selling for, maybe even say $4,000, right? $4,000. Now that same pound is selling for, at best $1,200. And, it's like, how much is it costing someone that's cultivating to actually grow that product, right? And that's something, also to be taken into consideration is, people are building these, multi-million-dollar facilities and saying, hey, I have the biggest facility, but that's not what it's about, It's like you got to get the cost per pound as cheap as you can to manufacture it. Same thing with processing, and on the retail side, it's are you a good retail operator?
That's fantastic advice. I couldn't have said it any better myself. If you're not paying attention to your margins, if you're not doing the most basic fundamental things, you're going to have a bad time, because a dispensary is a retail store, and so if you don't have retail operator experience, you have a product that people want. That's great, but you've got to understand those fundamentals of, how do I manage my inventory? How do I make sure I'm staffed, correctly? How do I engage in marketing and advertising to drive people in the door to stay competitive? Those things don't change. Those things aren't cannabis specific. Those are just any retail business needs to be doing those things. And so, we all spend a lot of time focused on the cannabis aspect, but the fundamental business aspects are, that's really what it is at the end of the day. So that's fantastic advice. Man, Andrew, I know, I imagine you're probably seeing the same thing. We get calls, it seems like every single week with one client looking to acquire another player in this space. Can you talk about how much M&A you're seeing right now? What type of M&A activity you're seeing in the cannabis space here in Michigan?
Yeah, there's definitely a good amount. I feel like every other week, one of my clients emails me and say, hey, we need to get this request list together for a potential buyer. They want our profit and loss statement or balance sheet, these contracts. And so we are seeing that a lot right now. And the one thing that I'm noticing or seeing is how quickly the process can go versus with our clients that have been with us from the beginning, where everything has just been, we're on the same page, constant communication. And then our clients where there's not so much of that. And they say, hey, Andrew, can you help us walk through this M&A process? So, as we go through it, the buyer will usually have their own CPAs coming in, doing due diligence, and they'll have their request list. And for the companies that are not ready for it, that process is a lot slower. And as with any type of deal flow, like speed is the key. Like the longer a deal will go on,
everybody wants to close yesterday.
Exactly. Yeah. The longer it takes, the less excited potentially a buyer can get, and the less ability you have to answer questions. The less ability you have to give support for what your financials look like. I mean, these are all like deal killers. And I've seen that with some of our clients and some potential, some of our clients buying other companies. We take a look at things. We're like, hey guys, this is not everything that you hoped it to be. Which kind of just goes back to the point that Matt was making, one of us made earlier on, saying like, this is something that you need good financial reporting from the get-go, and having a good CPA, like third-party CPA or in-house CPA, somebody that has experience. Building out financial reporting, building out, something that's going to be presentable to not just a buyer, but to a bank, for lending. all that's different opportunities. And then also there's some people that they don't necessarily have a potential buyer out there, but they want it to always be ready. So you get a lot of requests for people asking for audited financial statements. And we'll, brief them, say, what do you have going on? What do your financials look like? And there's been some cases where we actually went through the process because their CFO, whoever it was very confident, saying, hey, I'm ready to have an audit. We want to potentially show this to buyers if somebody comes to us. And we get into things that would show us, look, you're not ready for an audit. These numbers all have support. There's no way we can get comfortable around inventory is a huge one. Try to understand how to substantiate the value of inventory that they have on their books at a specific point in time. And just having that infrastructure to be ready to be audited. I think a lot of people or a lot of owner operators say, okay, I'm going to go get an audit. I'm going to have the CPAs look at everything and it'll be all good to go. But it's really a process, like being ready for that audit or being ready to sell your company. I think requires a lot of preparation and consideration around accounting one, but also around a lot of things, around your contracts, and making sure that, if you have like license agreements, all the things that are tied to your company are in order. If you have a bunch of, another one that's related to the financials, but also something that you probably see a lot of, it is a lot of people's financial statements have different loans from 50 different people that might not be documented or actually, a thought out interest rate and anything like that. So getting those all in order and being able to answer that question when a buyer said, hey, who was selling $100,000 for it? And that was my uncle. He just, he gave you $100,000. That's not like documented anywhere.
Right. Members injecting capital in the company to fund operations, but not properly documenting those things with corresponding loan agreements. Yep. We've seen plenty of those, as I'm sure you have.
So being a cannabis licensee in the state of Michigan, it says in a law that you have to present some sort of financial reporting. And what that, it's sort of a law in the beginning, what that was the state, ARA, and the MRA, now CRA, required that all licensees go through a process to have this annual financial statement report where a third-party CPA would come in and essentially like audit their books. And it had a set amount of procedures. You have test revenue, test expenses, test equity, all these different areas. And I think that's the last of those reports ended last March. But recently the CRA came back out and reinstated the rule, because I think before it was kind of like a trial run almost. The CRA kind of put these rules out there, and all the licensees and CPAs all kind of went through the process for this specific Michigan-specific compliance requirement. And they kind of took a pause on it and said, okay, this is what it looked like for that first round. It was like Tuesday or not yesterday, a couple days ago, that they released the new reporting requirements for licensees, which they're going to keep the annual financial statement report requirement going, but it's going to be only every 3 years. So before it was an annual requirement that, and it was split up between medical and recreational. So it'd be one report for med, one report for rec. Now they kind of combine two. So every company will be subject to this rather than just the licenses. And so that's another ad test or audit driven compliance requirement that's mission specific.
Yeah, that's a great point. So, and to provide some context for folks out there, the Michigan legislature in December 2021 amended our state's medical licensing statute to give the agency the discretion to require reporting annually or every 3 years. And so the agency's now decided to go to that every 3 year requirement. And so, which I think a lot of operators are very relieved about, the process that folks would go through, annually for each license, and medical and adult use was very, very labor and time intensive. So hopefully the every 3 years and getting things consolidated gives a lot of these operators some ease and helps streamline that process. So it's not just we're always under audit all the time on these things. So that's great advice. Anything else that y'all want to touch on?
I think that's really, we kind of hit all of the main topics. Yeah, big points. And I think that's all that we have. We appreciate you having us on, John. Yeah.
That's
Yeah.
it for us here today on A Higher Law. Thank you very much, everybody, for listening along, and special thank you to Andrew Dakki and Matt Abbo, DA Advisory Group. You can find them online at dacpas.com. My name is John Frazier, and very much look forward to seeing you next time here on A Higher Law.